Hello everyone, we will be starting the session in a few minutes. Thank you. We will start the session in the next 1 minute or so. Thank you. Okay, I think we can begin today's session. I hope everyone is able to hear me. So as you can see, today's topic is pre-IPO stocks. In today's session, we have with us Mr. Sai Prasanth Nomula. He is a vice president and a team lead here at Wealthy. He is one of our best performing and youngest team members. In fact, as some of you might be able to make out, he completed actually his MBA only 3 years ago. But despite his young age, he has already acquired an impressive client base, a very good AUM, and he's our go-to man when it comes to everything to do with unlisted stocks or pre-IPO stocks. Okay, so before I hand it over to him, I'll give you a quick introduction. For those of you who don't know, my name is Srinivasan. I take care of content and training here at Wealthy. So many of you may have attended our earlier sessions. So I usually take these sessions. Today, as I said, we will be discussing about pre-IPO stocks. Before we talk about pre-IPO stocks, let's look at what are the returns that you get from other products. Okay, so those of you who have attended our first training session would know that basically there are two ways to make returns through selling financial products. On the left hand side, you have the slow and steady method in which you acquire a huge AUM and make about 0.7% of the AUM as your revenue. So for example, if you have 4 crores of mutual funds, equity mutual funds, you will get about 25,000 rupees as your monthly income. Okay, but like I said, that is a slow and steady method. The other way is by specializing in high revenue products like guaranteed return, high value term plans. One of them is unlisted securities or pre-IPO stocks, which we will be discussing today. Okay, let's also look at how much money you can make through other products. Okay, this is important because this will explain where and what makes pre-IPO stocks different from others. So on the screen, you can see the screenshot or the revenue screenshot of a wealth partner who is from financial services. He sold a term policy from HDFC, Click to Protect. The premium was close to 3 lakhs, 2,99,142. Please look at the transaction amount. Now look at the revenue. For a premium of nearly 3 lakhs, he got 30% or nearly 90,000 as the revenue. Moving on, another professional from financial services. In this case, he sold unlisted stocks. Okay, look at the last. Look at the first 4 rows. Let me actually highlight that. I am referring to these. I am referring to these 4 products. 4 or 5. Yeah, 5 products. As you can see, all of these were, or rather, most of these were unlisted stocks. Okay, one was an MLD from Shriram, but the other were unlisted stock from Quantmac. Okay, overall, again, the overall transaction amount was close to 51 lakhs, for which the commission was more than 7.5 lakhs. If you look at the rows only for the unlisted stocks, okay, if you look at the first row, for rupees 2,60,000, the commission was nearly 1 lakh. Okay, for the third one, again Quantmac, for a transaction of nearly 11 lakhs, 10,95,000, the revenue was 47,000. Okay, note this. Okay, same product, but it is being sold to 2 different individuals. The revenues are different. Okay, and finally, if you look at the second last row, okay, again 2,60,000, the revenue is slightly different. Okay, so all of this we will be explaining in our future slides. And of course, this is our most preferred guaranteed return plan. It's called HDFC Life Sanchay Plus. As many of you know, HDFC Life Sanchay Plus offers nearly 35% commission or revenue to the wealth partner. After GST, it comes to nearly 33%. So in this case, the wealth partner sold a premium of 1 lakh, for which he got a commission of 35,000. Okay, so this is what you can earn from other products. With that, I now hand it over to Sai. Sai, you can explain the rest of the session. Thank you.
Hi everyone, good evening. Hope my voice is audible, Srini.
Yes, loud and clear.
Thanks. So as Srini has explained about how the unlisted space is working. So let me explain what is this pre-IPO shares. So pre-IPO, so we are buying the shares before the IPO. That's the first one. And why pre-IPO? Why not the shares at the time of pre-IPO, at the time of IPO, or after the IPO? First IPO we'll see. For IPO, there is a price band that it will be, you have to buy up to 2 lakhs of amount. You cannot buy more than that. So you have the restriction of your buy. That's the first thing. Second thing is probability. So here in IPOs, you work on probability. You may get or you might not get. So that's a second point. So let's take the shares which are listed after IPO. If you want to buy them, already the share prices have been rallied. Let's take Zomato case. Zomato came at IPO band of 74 to 76 rupees. And if you see the share now, after the IPO on the day one itself, it's like 140 rupees. You told you want to buy it. But now at 76 rupees to 140 rupees, you are almost 100%. That means you are not able to buy at the same price. Instead of one share, if you are thinking of buying 100 shares, now you are buying only 50 shares. That means see how the increment happens. So if you see the same share value in the month of January Zomato is at 35 rupees. So see the price band in pre-IPO space. I'm telling about pre-IPO space. In January, the share value is around 35 rupees. Then it went to 76 rupees at the time of IPO, and after IPO, it went to 140 rupees. This is one of the nearest IPO which went. And apart from that, there are so many IPOs which came into the space and which are coming in near future. So let's take example about Reliance Retail. Reliance Retail is the one of the retail partner, retail company of Reliance Industries, which does. First, they are into Reliance GeoMart, which is online platform for uh, e-commerce. Second thing, they are into physical spaces also, like Reliance Mart, Reliance Fresh, then Reliance Geo Stores, which provides this Geo services. Then it also sells. It also has some brands which are tied up, like Mothers. So when you click on the information sheet, can you click on information sheet, Srini?
Actually, Sai, can you present it
Yeah,
from
yeah,
your from your PPT
yeah,
or do you?
yeah, yeah, yeah.
Okay, thank you.
So, so if you can see under the Reliance Retail, there are so many brands. As previously I explained about Reliance Fresh, Reliance Smart, Reliance Jewels, Reliance Footprints, Agio, Reliance Market, Reliance Digital, Reliance Resco, Trends, Project EU. Then comes the luxury brand like George or Money. They want to get one space in India how to sell their products. Stu Madden, which is luxury brands of uh, uh, women's wear. Then Michael Gog, Gas, such up all this kind of brands require their entry into India. So with the help of Reliance Retail, they are taking the entry into the India and they are buying it. And previously, I told you about the Reliance Geo Mart dealing with Reliance Industries. That was also clearly mentioned. So here, what happens is Facebook has invested into this campaign, and this is one of the structure. If you see the revenues, what is the CAGR? 2014-15, it is like 2,621 crores going into 11,316 crores, which is like almost more than 5 times, I can say, of the profit they are getting, and CAGR of 34%. And if you see the net worth growing 35 years, 35% is the 3 years CAGR. Then total assets are also increasing. It's not like only one thing. So this is how the thing is. So this is one of the example. So then we'll discuss about Hero FinCorp. Hero FinCorp is also one of the NBFCs from Hero Group. So which might be in IPO in next 1 year, 1 or 2 years. So whenever you tell a client, don't tell the client that it will be coming into IPO in next 6 months or 1 year. Keep an origin of 2 to 3 years that that will become your safer side at any point of time. Why? Because this is a space where it will give revenues. I mean, where it will give more returns to the client when the DRHP is filed and it is nearing to IPO. It's not like when the DRHP is filed, you buy the shares, you will get less returns. Let's take Paytm. One of somebody have asked in chat about Paytm. So if I say about Paytm in January 2021, the price is like 800 rupees. Now you can see 2950, and last month we sold at 2500 rupees per share. So this is how the share is. When the DRHP is filed, see the growth 800 to 2500 within 6 to 8 months of origin, and now it is going to see the new high. It's not like the valuation has stopped from last month 20. Once the growth also happened, then the shares are also raising its prices 2500 to 3000, then 3000 also will raise. Why? Because previously they thought about a normal valuation of 3600 or 3700. Now they are thinking about higher valuations, about 4500 or 4900 around. So this is how the shares are. So this is how the thing is. So let us take another examples also. As I told about Hero, then Hero has a very good benefits of an NBFC. And if any industrialist is going to come into banking sector, Hero might be the first person. Why? Because it has satisfied all the banking rules. Why? Because this company gives more of secured loan. So as per banking rules, if you have 85% or more secured loans, then you can apply for a banking license. Whereas previously, an industrialist cannot apply for the banking license. That's the reason there is no Tata banks or Reliance banks in India. Now they will come in near future. So Hero might be that. Then coming to Merino, Merino is a plywood company with a debt-free capital. There is no debt in this company. And when you see the peers, Sanctuary, and these companies which are listed, which are trading at high PE. PE is nothing but price to earning. So whether the share is trading at premium or discount, we can see from PE. We will see industry PE. Industry PE will tell you what is the industry trading at. You see that company which is trading at higher PE multiples than industry PE, that means overvalued. The companies which are trading under PE are undervalued. So when you see this space of Merino, it is like exactly almost valued like industry PE. It's not overvalued, whereas a competitor like Sanctuary and this kind of companies have overvalued and they have debt. So they have to pay interest to their creditors also. So it means that the growth will be stagnant for some time. Whereas Merino is like industrial plywood. It don't go to normal companies like normal homes or anything. They are into industries, companies. That's the reason if you see they give advertisement at the time of IPL only, because there is that is the time where industrialist or anyone sees their ads. So this is the time they can get into. Even brands like Audi or BMW gives advertisement at that point of time so that they can reach exact the customers they want. And coming to Stud Accessories. Stud Accessories is a helmet making company. Last year, when COVID is there, this company is also profitable, whereas travel is not there. How the company is profitable? Then they did one innovative experiment called face shields, and this was very hit. So they have contracts with some airlines, so like Air India kind of stuff. So with their contracts now, every time if you do a travel, the face shield is compulsory. So studies already taken control about the face mask and face shields. So you will be the persons you investing into the company, and the DRHP is filed in 2018 itself. They got SEBI approval. As the CEO don't want to go at the less valuation, he is taking the new strategies and taking new experiments and making the story, the company grow high. This is how you have to explain to your client to understand how pre-IPO space works. Then, Srini, let's take questions.
Okay, so Sai, we have a question again. As expected, someone is asking, should we invest in Paytm?
Yeah, I have explained that. So if you see share at 800 rupees in January 2021 and share at 3000, I mean 2950 landing to us, it is giving the valuation. Why? Because last month only we sold at 2500. Now it is like 2950, 450 rupees, which is almost 20% share increment in a month. It's a good valuation. And people are buying more. Why? Because Paytm is known company. If I say tomorrow the company name, they should realize that. That's the reason Paytm is giving good returns. How risky
Okay.
is pre-IPOs? So the risk involved in pre-IPOs is first, the companies are not visible to anyone. So your client will be asking what's the price, how you decided the price. So you have to understand the concept, how it was coming into the market. And then you understand that, then you yourself experiment, then you go to the client. That's the first thing I can say. Second thing, there will be so many people contacting your clients, or your client is going to approach so many people. Then you see their competitiveness. Our competitiveness is we are going to credit the shares within 48 hours, that is 2 days, to the client, or we will prayer inform when the credit will happen. Whereas with them, we don't know what they are doing, where, when they are coming to market, where they are doing, and they can give whatever the price they want. Because it's not like that. Everything is there in the your dashboard itself. So you have access whenever you want to see the price. Aramte, you just go to the dashboard and see the prices. I will in the next slide I will show how you can see the prices. This is the risk, and it is limited to people. So everyone don't have participation to that share. So that will give more value to the customer who is entering for a trade of 2 to 3 years. These are the risk and rewards. When there is a risk, then there is a reward. That's it. So then the question is how much commission on pre-IPO stocks, minimum lot on purchase of Reliance Retail. So commission on pre-IPO
Sai,
stocks.
if possible, can you actually show the dashboard?
Yeah, yeah.
How people can actually decide their own returns.
Own commissions, right?
Yes. So this, by the way, is a screenshot of all the available.
Yeah, all
Uh,
the available stocks will have the companies here. So when you click on that company, then you can see what's the minimum selling price, what's the maximum selling price. Based on that, your commission will be decided.
Sai,
For
if,
this,
do you have, if it is possible, can you log into your dashboard if it is possible,
my
and
this
just
backend.
okay, okay.
So here, what happens is a simple thing. When you click on Hero, there you will have maximum selling price and this one uh, minimum selling price. Based on the selling price, then you will get the commission based on that. It's not like it is fixed. It's based on that, and we will tell you what's the maximum, because after that, if you go into the market, it doesn't give the value to the customer. That's the reason we are keeping the lower band and the upper band. And the lot for purchase of Reliance Retail, 1 lakh rupees. Is there any lock-in period for share pre-IPO shares? So there is no lock-in period for pre-IPO shares till the share go into IPO. But once the share goes into IPO, there is a lock-in of 6 months. After 6 months, the client can buy or sell whatever he wants. Customer is wanting to know on what happens if the IPO is not realized by the company. So that's what I explained. It is not compulsory that you have to sell with the exchange. Exchange is nothing but NSE or BSE. You can sell with us also. Suppose if the client is thinking, suppose let's take example, you have sold uh, Paytm at 2000 rupees 1 year back, and now the share price is 3000 rupees, which is like 50% up, and client is also happy with that. So he told he wants to exit. Come back to your relationship manager, he will tell you the price. And if customer agrees, customer will be transferring the shares to wealthy account, and wealthy will transfer the money to the client account. It's as simple as that. For this, the customer should require something called DIS, delivery instruction slips. When he has delivery instruction slips, he has to write what share he is transferring and to whom, and submit it to the depository. Depository is nothing but broker. Suppose he has which demat, Zerodha, ICICI Direct, HDFC Security, whichever is. He just go and submit that slip to the depository. Then one email will be triggered from the depository like NSDL or CDSL. He has to pay the stamp duty and approve the transaction. Then the shares will be transferred to Wealthy. Once shares are reflecting in Wealthy, the in some time the money will be transferred to the client demat, client bank account. Sorry. So that is as simple as that.
Sai, we also have a question from Kailash. So yeah, I think you have answered the question of lock-in period, correct?
Yeah, correct. Before IPO, there is no lock-in period. After IPO, there is a lock-in period of 6 months.
Okay.
Again.
What about, we have a question from Amarendra. What is the brokerage to be charged to customer?
So it depends upon the customer to customer, share to share. So for this, better contact your PST team, your concerned relationship manager. So what they will do is they will assess the client. You explain the client what type of client he is. Based on that, they will assess and they will tell you the share. In the first initial transaction, take the help of them. After that, you will understand yourself and you can do on your own. That's the best thing I can say. First practice. After practicing, do your own side. So not only this, if you have any other companies, if client is looking into, so some of the shares, as we have researched on, there are so many shares in the market, but we have positive research on this. That's the reason we have kept only this. If you want more, like somebody is asking about Tamil Nadu Mercantile Bank, Anand Rathi, ASK Investments, this kind of shares also. You can just ask us. So we will tell what are the pros and cons. If client is desperately needing that share, we can give that. That's not an issue. So it's all about the client at the end.
Kailash has another question. Can we sell partial shares?
What is partial share?
Like some of the shares, like within, not the entire lot, but some shares within the lot. I think that is what he means. Please correct me if I'm wrong, Mr. Kailash. Also, Maulik, Sai has answered your question about the risk of pre-IPO.
So I don't know what's the partial share mean. Is it like US where you can buy in 0.1, 0.2% of share? No, we cannot buy. There is no legalities in India. We have to buy at least one share. So that is how the thing works.
Sai, can you again explain?
Yes,
can you again explain?
I have 100 shares. I want to sell 50 shares. Yes, it's possible. It's possible. That is not partial share. Partial lot or your shares you want. Yeah, it's possible. You want to check, you can sell anything. Is there any lock-in period? Yes, I'm explaining again and again. After IPO, there is a lock-in period of 6 months. Before IPO, there is no lock-in. You can ask the code from your relationship manager, and buying codes and selling codes are different. So don't think that the share price of Paytm in the store is like 2,950, whereas the buying price is like 2,900. The 50 rupees difference is common.
Sai, I know you have explained it, but can you, for the final time, quickly explain the commission structure on pre-IPO?
So commission structure, yes. So what happens is in the store itself, we have given you the prices. One is minimum selling price, one is maximum.
If you want, I can show you the dashboard.
Yes, better.
Okay, please. I'll share my screen. 1 minute. Can you stop sharing your screen? Yeah. 1 minute. 1 minute. Share screen. So I go to, again, for those of you who are new to Wealthy, please go to Wealthy Store, click pre-IPOs. Let's say I click Studs Accessories. Sai, can you guide me from here?
Yeah, so you can see minimum selling price is 1875 and maximum is 2,200. So here the commission will be like, can you open the calculator, Srini?
Okay, 1 minute.
Yeah, normal calculator.
Okay, are you able to see the calculator?
No, no, no.
Okay, 1 minute.
Then do one thing, Google calculator. That's it.
Yeah. Okay, tell me
Hmm.
the 1875 into
No. Suppose we are giving 1875.
uh,
So you are selling at 2000 rupees. Let's take example. So
okay.
2000 minus.
Okay, 1 minute. In that case,
Hmm.
I'll have to share it as a separate.
No. Just go to Google and you can do that.
Okay. In that case,
Yeah. Just Google calculator will be there. You can use that.
okay, 1 minute. Okay, you are saying. Okay, yeah. So 2000. Okay, 1 minute. You are saying 2000
2000 minus
minus 1875
1875
75
is equal to. So you
into.
are selling at 125 rupees premium. So divided by. So in this GST is there. So you have to remove GST divided by 1.18.
Okay, 18%, correct?
Yes, 18% is the GST. That's the reason 18%. Then you will get 105, 106 rupees around. Into 70% is yours.
Okay, so for every
So per
share you will
share,
get 74 rupees.
yes, correct. So you are
That is if
selling
you sell
100
it at the
shares.
minimum price. That is if you sell it at the minimum. I
Yes.
think
No. It's between minimum and maximum price.
correct. Okay.
Yeah. Into, suppose let's take you have sold 100 shares. So into 100 you can keep. That's it. This is how the brokerage structure works.
Okay, nearly 7,400 rupees.
Correct.
Okay, so I hope that has answered. Okay. We have another question. Okay, so I'm stop. You can share your screen now, Sai.
Yeah.
Okay. Anurag, will Paytm IPO be available before December 2021? Sai.
That's company's decision, not ours. We are not the person who is going to do. So it is like it will come into IPO before that. It's all about companies.
Okay, I think we have another question from Amarendra. Again, he's asking, will the price band at IPO be above the present price? Again, I
Yes,
don't.
definitely. I have explained about Zomato also recent IPO. So Zomato is at 35 rupees, 30 to 35 rupees in January 2021. Whereas it went to IPO in June at 74 to 76 bank, which is almost 100%, more than 100%. Currently, when on the day one itself, it went to 140 rupees. That means the client who has invested at 30 rupees is at 140, which is like more than 4 times. That's how the returns are. Select a good company, which we are researching and we are giving to you, and be on that better. Why? Because we have positive approach about that.
Okay, Maul. So Sai, can you continue with the rest of your presentation, and then we will take questions in the last 15-20 minutes.
Yeah. I don't know who is this PUBG. So if you are in a public forum, don't use a word which is like bekar or something. Some people like that company, some people not. So it's your own view. Here we are liking that company means we have backed up the research report. So if you have any research report, you can contact us with why the company. If it is not a good company, people are not ready to buy at 140 rupees or 130 rupees. So you have to understand. If you don't know about that, please understand. So the price band at IPO will be above the present price? Yes, definitely yes. Why? Because whenever the investment banker is appointed for doing the IPO, he will seek the gray market premiums or the market premiums which the share is trading at. And he has to add its margin. Why? Because company will not tell. Basically, why I have to go to IPO? To raise the funds. So why I have to raise a premium or discount? If it is discount, people will be seeing the share prices, which is less than that. So it will not give good position to the market, good position to the previous investors. That's the reason they will investment banker will be seeing all these things. And not only this is the only way. There is another way for holding the shares, which is in the form of alternate investment fund. If you go into the product deck, the clear explanation for Aventus, Sauce, and another one works and finds in AF we have given. So you can just go into that. There are so many forms to go in and invest into the stocks. So these are the different types. So here we are giving with minimum investment of 50 to 1 lakh, whereas alternate investment fund will have an investment of 1 year. So next question, how much investment in Reliance Retail? So as I said, minimum 1 lakh. So there is one question, after 6 months, how can we sell this pre-IPO stocks? Automatically it gets listed and it will come to your portfolio. Directly you can sell with exchange. There is no letter or something you have to write. Automatic it is. NSDL or CDSL releases your share from lock-in and you can directly sell. So there is no problem with that. So any other doubts?
What is the maximum number of shares one can purchase? Again, this is a question from
There is no maximum. If you want to purchase for 10 crores, 15 crores, even whatever the thing is, based on the company's market cap, we are able to give you. No problem.
Are there dividends from unlisted shares?
Yes, yes. It's like a listed share, giving all dividends, bonus, everything.
Okay. Priyatosh is asking, are there any fees required to become a mutual fund distributor from your forum? I don't think there is any fees required.
There is no fees, and we provide training at free of cost also. So you just contact your relationship manager. They will guide you, or just message Srini. Srini, just give Priyanka number to him.
Yeah, Mr. Priyatosh, I will message you separately.
So I have explained the revenue structure, the straightforwardness. So Srini, can you share your screen with the system? I will tell how to create a proposal.
Okay, I will do that. 1 minute. Okay, so we were trying to do it for studs. Okay, so by the way, if you want to read the report, please click the link here. Okay, so yeah, you will get all the information. For every pre-IPO stocks, there is a report, okay, which contains all the information that you need to take a decision. Everything is given here. So this is for studs. Yes, Sai, can you tell me what?
So first, when you select a share, then you have to select.
I don't have clients. You know, in this account, I don't have clients.
Yeah, just go to my clients and add a client. No problem.
Okay, 1 minute. My clients.
Yeah, yeah, you have clients. No, fine.
Okay, so yeah, okay, yeah. 1 minute. Pre-IPOs. Let's say I click again the
That's
select client.
Works. Yeah.
Yeah.
So then click on continue. Here you have to add client demat account details. If you are not adding, if you want client to add the demat account details, skip this step. So then you have to give the bank account details. If it is mutual fund registered, automatically it will the step will go. So this also you can skip. You can give the client to give the details. Then you can send a payment link.
So I click
it is as simple as that. And here, if you click on that link, for example, just click on that link. A WhatsApp message and an email will be going from Wealthy.
Okay. So I click to copy, right?
Yeah, click to copy and open in another tab.
1 minute. Okay, I think 1 minute. Are you able to?
Yeah, I'm able to see.
Yeah. Okay, so this is.
So you can see you have raised 50,625, 27 shares at 1875. So from here also the client can access the security report. You need not share. Go up. Here, see, access this securities report. Whichever you are able to see, the same report will be client also can see. And clients will not get to know about your commission, don't worry. So when come down, Srini, once. So when client click on verify and proceed, client will get one OTP to authorize. Once he authorizes, he has to give his demat account details and bank account details. Then he can pay. Once the payment happens, the backend system will control everything and create the shares into the client's demat account. Simple. And once the shares are created, even you will get the intimation that the shares has been credited to his bank account, demat account, and client also will get an SMS. I mean WhatsApp. So this is the entire process of uh, pre-IPO shares.
Okay,
So
we
if
have two
you
questions. One is from Lalit. Do we have Reliance Retail now? No, I think.
currently it's not available, but you just contact your relationship manager. So once it is available, immediately they will post you. Because of
Okay.
higher, I mean, because of so many things, the liquidity of the share is very less.
Amrinder is asking the question, how can the client sell the share? I think we also help in selling the shares, correct?
Yes, I told about the delivery instruction slip. So first of all, client has to apply delivery instruction slip with their broker, which is which is holding the depository, like Zerodha, ICICI Direct, or this kind of things. Once they apply, then they will get the slips to their home address. They have to fill it up and they have to give to the broker. Broker will initiate the transfer. Once they initiate the transfer, they will get an email from NSDL or CDSL to authorize. Once they authorize, they have to pay the stamp duty. Once they pay the stamp duty, the shares will be credited to the wealthy, and wealthy will pay back. The simple process. Can I purchase a stock and can I sell to my client in higher price? I didn't get you. Why you have to purchase a stock and why you have to do all this process? We are here to help you.
I think Sai, he means that if he purchases the stock in his name, he can quote a higher price. I think that is what Prasenjit.
Higher price, then what happens is our research doesn't work. You are doing on your own. So if something happens wrong, wealthy is not responsible for that. Why? Because if you are buying it, wealthy is responsible for buying back also. If you are selling, we are responsible for buying back also. That's what the thing is. And we do research. That's how we are telling the higher maximum price and minimum price. It's not like we are not doing that. My landing by minimum price is 100. If I offer the client at 110 rupees, then my commission will be 10 rupees. No, there will be a GST included in that. So 10 rupees you have to divide by 18%. Then you remaining whatever the amount is there, you will get 70% of that. I hope I have answered, Vinith. So if you have any more doubts also, just contact your relationship manager. They have working of the Excel working of the calculation, how they can do that. And you can give it to your client. If my client invests in mutual funds in Wealthy app directly, do I get commission for every SIP and lump sum? Yes, if he is under your client list. If he is not under your client list, then you won't get. Anurag Reddy, I think I have answered you. I have some query. Prechus, just can you tell what's the query? Why? Because you are asking. Can you type in better so that everyone can understand? That's a better thing.
Yes, or alternate or Priyatosh, what we can do is I can ask your relationship manager to give you a call. I have already noted down your number. Most likely tomorrow you will get a call from your relationship manager for your queries, or you can share your if they are related to pre-IPO. Please type it in the chat box. Sai, let's move on to the next one. If my client invests in mutual fund in Wealthy app,
Yeah, I have answered that.
okay, yeah. Is there any guaranteed return for pre-IPO? No, there is no guaranteed return. Sai, do you want to explain?
Equity is not a guaranteed instrument. Even fixed deposit is not a guaranteed instrument. So only we have a guaranteed instrument in the market is Sanjay Plus or endowment plans with non-participatory, which is giving a guaranteed proportions. Except that there is no guarantee. Only when we are driving on the road, it's like equity. We don't know whether we'll reach home safely or not. So when you reach home safely, that is aggressive. If you are reaching, if you are not reaching home, that doesn't mean that you are dead. Correct. That means that's it. company expected IPO dates. That's what I explained you, Prasid. So what happens is the expected dates we don't know, but expected years we can give within 6 months or within 1 year. Because if I tell you the expected date, everything, then company will not go on that date. Then what does it mean? It doesn't mean that. So there are so many regulations. A company has to give to SEBI to register an IPO. So we are going to give the time band, whether it is going to come in 6 months, if it's going to come in 1 year, 2 years, or 3 years. Based on that, you can take it action.
Okay, so this is not related to today's subject, but Sai, can you quickly answer this question?
Minimum SIP amount is higher in wealthy than direct MF companies. Can it be the same? So here what happens is with wealthy, there is an algorithm. So here we rebalance the portfolios. Here you are not going to purchase the fund. You are going to purchase portfolio, which is group of funds. Group of funds every month. The fund, I suppose you are investing 5,000 in 3 funds. That means 2,000, 2,000, 1,000. Let's take example. It doesn't mean next month also that 2,000, 2,000, 1,000 will go. One fund might be 2,500. One fund might be 1,500 because of the higher NAVs and lower NAVs. This is the algorithm inbuilt, so you need not worry about that. That's the reason we do direct purchase. That's the reason the SIP amounts are higher. If you want to register with the same, just contact your relationship manager. They will make it the same. No problem.
We have another question from Amarendra. After purchasing the share, how many days will it take to reflect in the client broker app?
My better suggestion is ask the client to download NSDL or CDSL apps, whichever the demat depository they are into. It will reflect the very next within 1 hour after the SMS. We are sending the SMS, right? Once the SMS was sent, within after 1 hour, you can check in the NSDL or CDSL app. It will reflect.
Chandru, I'm not sure if there's a question there. Frequent reading in portfolio creates taxation issues. If you have a question, we'll be happy to answer. Sai, do you have anything to add there?
I didn't understand the question.
Okay. Sai, do you have anything else to show in your presentation?
Nothing.
Priyatosh, I suggest, I have already informed our team internally. You will get a call from your relationship manager tomorrow. He or she will answer all these questions. I'm not answering them right now because they are not related to our presentation for today. Sai, I think it's a good time to tell everyone, that pre-IPO stocks are not meant for everyone. That there is a higher element of risk in this. So can you just, because that will clarify all the expectations related to pre-IPO.
Yeah. So pre-IPO, as I told, it's with limited people. It's not like publicly available. Sorry. So it's not publicly available. So you have to take the chance. You have to segregate. First of all, understand how much client has. Suppose client has 20 lakhs and you are telling invest 20 lakhs in pre-IPO shares. It is not a correct portfolio decision. First of all, understand when he requires this money, whether he requires this money after 2 years or 3 years. Then you can suggest. If he is not getting that, he requires after 6 months, then how you can suggest based on the origin, based on the goals, you can suggest. And it should be part of portfolio. It's not like entire portfolio. So for that, in the initial stages, in the starting stages, understand sitting with your DWM, how your relationship manager, how the things works, what is his portfolio, how to understand the client portfolio, so that then you can understand in the next. So Chandru is asking about taxation. So taxation within 1 year is 30%, or as per the tax law, after 1 year it is 20%. Is it good considering 15% tax for short-term gain? No, this is different. So this comes under unlisted shares. Unlisted shares are taxed differently, and listed shares are taxed separately. But when the company is going to IPO, after IPO, it will be short-term capital gain. It is 15%. Long-term is after 1 year, 1 lakh, 10%. Renila Thakur, is there guarantee in the release of pre-IPOs in the market? There is no guarantee. Previously, as I explained, there is no guaranteed returns or guaranteed dates. It will be approx dates. That's it. Is there anything like SEBI regulated license or something like that for wealthy, so that we can show it to the client? We are AMFI registered distributor, so you can show it, and we are IRDA registered also. When you go to the end of wealthy website, you can see our ARN code for mutual funds and IRDA code. So we are a registered.
Sai, actually, let me answer that 1 minute. Since Yeah, let me actually share my screen because it's
Yeah, yeah,
surprising that this question should come up. Okay, if you just go here, Anirudh, wait, are you able to see this
yeah,
right
yeah.
at the bottom? Yeah, it has our AMFI number, our IRDI number. Okay, well, these absolutely free. If you also go through our FAQs and about us page, okay, like for example, all the money that we wealthy does not keep a single rupee that you invest via, it goes to the respective investment or the respective company. Okay, we are in that way only an intermediary. Okay, so wealthy is absolutely safe. Our servers are bank grade. We employ bank grade security, so there is nothing to worry. And of course, over the last many years, we have done thousands of transactions, so it's absolutely
Crores
safe.
of transactions instead of thousands. Crores.
Yeah, correct. Okay, better. So yeah, any other questions? We are nearing the end of our session.
Pre-IPO for Kerala agency open is open. You can see in the dashboard. So Lingampalli Prashant has asked if the tax is 30%, then the stock has gone up by 48%, including GST. Is it possible with every stock or waiting for 6 months? I didn't get this question clearly. What happens is you are mixing up stock growth. Suppose 100 rupees is the stock and it went up by 130 rupees. That means out of 30 rupees, you have to calculate the tax. You should not calculate the tax on 130 rupees. And on selling, let's say client sold it, there is no GST included in that. Why? Because GST doesn't come in buying and selling. This is capital gain, what I am telling. And is it possible with every stock and waiting period? The waiting period after IPO is 6 months. It's for every stock. The waiting period is 6 months. That's the thing. If anyone has any questions, please type in chat box.
Any other questions? Please keep your questions relevant to today's topic. Also, if you still have any questions, please feel free to reach out to your respective relationship manager. Sai, so would you like to end today's session by summarizing what makes pre-IPO different from other products?
Yes. So why pre-IPO? So client will be asking. So if I take some aggressive bets, where will I get more returns? It's a part of portfolio. I want to take risk. At that point of time, this will be the first option you can give it to your clients. Why? Because higher risk and higher returns. And second thing, here, if you can segregate with the relationship manager, why he is selecting this stock, why not others, and how much price you should sell it to him. You will be the first person enjoying the returns. There are some, as previously I told, one of the relationship manager has earned 7,72,000. So you can understand how he has sold. He has understood what he has to do. Then he has sold accordingly. This is how the thing is. So in the initial stages, we have to do that. Recently, there is one question. Recently, 3 or 4 stocks opened in discount. In this case, how can I book profits? It's not about discount, right? I told IPO price is different and pre-IPO price is different. Before only, suppose let's take other example, Catholic and Syrian Bank. My client bought at 80 rupees and the IPO price is 170 rupees. And the share price on the day one, it's like 150 rupees. It was discounted by 20 rupees. And the very, after some time, it went to 200 rupees after 1 year. So he sold at 200 rupees. He bought at 80 and he sold at 200. That means he made profit, right? How is the best way to promote IPOs? Pre-IPOs, the best way is first you tell your client to apply for an IPO. The chances of listing is very less. So if he gets then it is okay. If it doesn't get, then you can directly say you have to you thought of investing 5 lakhs. You bond with 2 lakhs first. Second thing, you don't know whether you are going to get it or not. So then why you are applying for that? Third, you are participating with n number of people. Here we are keeping the money shares into your demat account directly before the IPO. What best you need. That's how the thing is.
How to best promote pre-IPO? Okay, so one is that we have shared a lot of creatives for each specific stock. So, for example, Studs, Merino, HDBFS, Care, and Tata Technologies. For all these, we have shared specific creatives that you can share with your clients, with your friends. That's point number one. Also, we have made a specific. If you check your WhatsApp groups, I think 10 days ago, we had shared an image or a creative explaining why pre-IPO is better than other kinds. So, for example, in listed stocks, they are very there's a lot of competition. Okay, and so pre-IPO is brings the best of both worlds. You can go through that creative again. It will explain what you need. Pranali, is it for long term or short term? Sai, can you explain?
It's based on the customer's origin. So suppose if you say Paytm is for short term, less than 1 year, or you can take 1 year of origin. Some stocks will have longer term. It's based on the stocks. I suggest long term. Why? Because you will get good money, at least 2 to 3 years minimum. As I given you the structure, how the company before DRHP has given good profits. You can see that.
Okay, I think then I think Sai, you have I think answered almost all questions. If there are any other questions, please reach out to your concerned relationship manager. Again, before I wrap up today's session, I would like to thank Sai for taking the time out and answering every question in detail. Thank you, everyone, for joining us for today's session. We will also be conducting more such sessions in future, and you will be informed about it through WhatsApp. For those of you who have joined Wealthy recently, your regular training will carry on as always. Tomorrow we will be doing a session at 7:30 for insurance. It is our weekly session on insurance. So for those of you who are new to Wealthy, you can join us tomorrow at 7:30. Once again, thanks, Sai. Until next time, it's goodbye from us.
Thanks everyone. Good night.